Welcome to All That Matters, a show about what's really worth your attention in the markets and economy today. Join hosts Michael Antonelli and Ross Mayfield as they tackle the latest headlines and answer real questions from clients.
Welcome to All That Matters with Mike and Ross. Mike, we are attempting to do the impossible right now, which is make content that holds up for more than a couple of days in this market. We've obviously seen a lot of volatility in the markets, in the real world. We're going to talk about it all, but I wanted to start with a piece you wrote and have you explain it a little bit, basically about weathering a storm, right? Comparing market storms to the real storms that we've seen across this country over recent days. Could you talk about that a little bit and frame us up?
Yeah, and that's such a good analogy for you in particular, Ross. I know the rivers in Kentucky are super high, like the rain, whatever. Like I actually wrote a piece called When Uncertainty Reigns, pun intended, and that was in response to the storms that we've seen in the Midwest and across the country, but also the market, the stock market that we're going through right now. And believe me, my friends, we have seen a heck of a storm in the stock market. Ross and I have never had a chance to do one of these during basically what you could basically label a crisis. The stock market's acting like it's a crisis. We started this series a couple years ago. The stock market has done pretty well over the past few years, and now we're in the midst of this. I looked up, Ross, of the kind of worst 3-day moves in history. What we've been through recently ranks on it now. So what you're going through ranks in the 08s, the 2020s, the Great Depression. This is what we're going through now, ranks in there. So uncertainty is reigning. And in my career, Ross, I was a trader. I've been in private wealth now. I've seen lots of them. I saw 08. I saw 2011. I saw 2018, which was also a kind of minus 20% market. 2020, obviously. They're tough to get through. I'll admit they're tough to get through. And I always try to tell myself the reasons are always different. One's a pandemic, one's a financial crisis, one's a new trade policy by a very controversial figure who wants to remap, America's policy. All of them are different, right? All of them are unique, but getting through them is tough. They're tough for everybody. I just want to open that at the start. We know it's tough. Telling you that the stock market grows over a long run is smart and right, but getting through these events is really tough. So I'm happy that we're here together, Ross, to put it into perspective. You've seen some of these in your career too, right?
Yeah, I mean, 2020 is the big one that stands out, where it's just like you kind of can't look away. The market is going down so quickly, so aggressively, and it's like COVID-19 in the sense that it's just a world reorienting event, right? COVID-19 pandemic did that in one way. The tariffs and trade war would do that in another way, but all something that the market is really grappling to get its head around in real time. That is borderline impossible to model or to game out or for anyone to have predicted with accuracy. So you're right. I mean, these deeply uncertain times, we plan for them, but by never knowing what's going to cause them, that they never feel good, right? They always feel just really kind of tight chested and you're kind of just watching all the red on the screen, and it's tough. But as you wrote in the piece, we can weather this storm. We've weathered storms before. So I want to talk about with you, like, the path of a storm, things that you've picked up, in recent days or over the course of your career, because like you said, we've been through these markets before. Anything that has stood out to you that's worth mentioning to our clients who are watching?
Yeah, there's a great quote I want to kick this section off with, and that is from a man named Howard Marks, who works at this company, Oak Tree Capital. It's a hedge fund. We've maybe mentioned him on the show before. A super smart behavioral finance kind of centered investor, but a super, super smart investor, one of the smartest in the world. He said this. He said, "I want to point out that there are no experts on the subject at hand, the one we're going through, the one you're living through right now. Economists have analytical tools and theories to apply, but no economist, no tool will produce a conclusion in this instance that we can follow with confidence. There have been no large-scale trade wars in the modern era. Thus, the theories are untested. The less obvious truths will be harder to discern." So if you've come here and been like, I hope Mike and Ross explain exactly what's going to happen. The smartest people in the world, Jamie Dimon, Howard Marks, we've just never seen global trade try to be reordered. But there are some stats we can look at in other crises that might lead us to some conclusions. One of them, Ross, I sent to you. Ross and I have a great chat. I wish you guys should get on it. Maybe we can sell our chat. One of the chats is when the stock market has really, really bad down days, right? So we had 4 days in a row where the stock market was down 12%. What happens after that? Well, the 1, 3, and 5 year returns tend to get really, really good. Past performance don't guarantee future results. So we're going to say that. So those will get through compliance. They tend to get really, really good. Why is that? Ross, how come when things get super bad, why do the returns get way better?
Yeah, well, it's kind of like the definition of markets, right? Like we're pricing when things go down that fast, that quickly. Investors are pricing in basically the worst case scenario, right? They're sell everything and figure it out later. And the reality, even if things don't improve immediately, the reality is usually a little bit more, sanguine than that first initial impulse. And so you're pricing in a crisis, and then a year later, that crisis hasn't materialized or it looks different, and markets have a really, really good starting point. So it's really hard to know when these things are going to happen. But the worst thing you can do, in my opinion, is get out of the markets now, because we have this really prime setup for forward returns, as you mentioned. I think the market has only been down 10% or greater over 4 days a handful of times.
Yeah.
The average return going forward is like north of 20%. And I think it's been positive 100% of the time, as you mentioned, or at least since World War II. Let me say, past performance is not a guarantee.
Yeah.
But we've got this great setup. Now, let me be the kind of bad news guy. We don't know, that year, that 1 year, 3 or 5 year, in this world we live in, where a day, a week feels like a year, that's a long way away. And what might the world look like as we kind of try to pace our way there could be very volatile. Our partners at Strategas note that a lot of times when you get these big sell-offs, you can have rallies, but then we tend to retest the lows or check, try to get back to the bottom a little bit. And that's when things are really negative and really dire. We have V-shaped bottoms throughout our history, but they're not something that investors should just expect. So kind of like baking into your expectations that the next 3, 6, 9 months could be really volatile, that the headlines will certainly be noisy, and just know that you have to kind of think about that longer term stat that Mike was talking about.
There's a stat on that, you mentioning like this, hey, like over the near term could be really, really still just as bad. I mean, this could get worse tomorrow. We have no idea. I don't think there's anybody out there that knows how the policy is evolving in real time. So just know that you're not alone in being confused about what's happening. There is a stat that says if the stock market falls 15% in a year, right? So a calendar year, January to December, if a stock market falls 15% anytime during that year, the year is most often negative. The calendar year is most often negative. In fact, it's only, if a stocks have fallen 15%, it's only turned positive for the whole year 3 times. One was in 2009, one was in 2020. So again, both coming out of a financial crisis, both coming out of a crisis. But there are good stats, there's bad stats, obviously. We could go through them all day, but what you're dealing with is very emotional. And we hear you. Believe me, you might hate everything you're seeing. You might be like, I hate all of this. My views are this is all bad. So you telling me about the stats really doesn't change my mind. And we hear you. I think there's 2 things you have to hold in your mind, Ross. And number one is that you can hate everything about this. You can. There are some people that there's some people that support this, okay? Everybody has their own views. We're not here to weigh in on that. You can hate everything about this, but should that stop you from investing in the long run growth of the United States of America? I buy every month in my 401k. I'm 51 years old. Ross does too, because we have retirements and we have college to pay for, and we still buy regardless of our political views, because we believe that growth will help us achieve our goals. Ross, this stuff it's unique in the sense that we're asking people to try to kind of put political views aside, right?
Yeah, I mean, and it's a uniquely political kind of catalyst here. Every drawdown, like we build plans, we prepare for drawdowns, we talk about them all the time, we set expectations. The one thing we can't do is ever know what the catalyst is going to be, right? Yeah. Going into 2020, I read market outlooks, you read market outlooks. Nobody was talking about a pandemic, and then it was the pandemic that was the catalyst. Some people will say that they had an idea that the tariffs could have done something like this, right. But the reality is the market reaction is the way it was because it was not priced in, it was not known. So
yeah, the magnitude was bigger than we expected. Yeah,
totally. And so I'm with you, and we're going to talk about what the umbrella for weathering a storm looks like. But I think your point on why we keep buying is important. Like, we own U.S. companies who exist solely to make money against any backdrop they find themselves in. Right? Not always perfect. Profits go down at times. They're not infallible, but that profit motive isn't going away anytime soon. You had I don't mean to put you on the spot because I think you might have wanted to end with this, but I kind of want you to give your analogy right now before we wrap up, because I thought it was really good.
Yeah, let's do that. Then we'll talk about just how to get through under your umbrella. So I had a great analogy that I heard from a friend of mine that said just bear with me with this analogy. Okay. Beavers are good at building dam, right? Beavers are really good at damming up a river. Okay. They're really good, industrious little creatures, and they can kind of create a friction in the river, right? They can stop the flow of the river. They can create a friction, but they cannot build Hoover Dam. They cannot stop the river. They cannot build Hoover Dam. Think about tariffs as a friction on the economy, a friction on global trade, a friction on these companies. And the river are U.S. companies. The rivers are the best companies in the world. Yes, they create frictions, but they cannot stop these companies who exist to maximize profits. They cannot stop them completely. It's like they cannot stop a river from flowing through the friction, okay? Best Buy, Apple, your local restaurants, everybody in 2020 figured out what to do when a virus raged, okay? Yes, this is political. Yes, it's difficult. Yes, we've never seen this before. Are they good at making money? Yes. And Ross's point is sound, right? Like the both of us invest and you invest on the long run growth of the United States. Ross, so let's think about this. Ross, like one of the worst things about this is that there's so many volatile days. Like, can you talk about best and worst days and just what's so actually painful about that?
Yeah, well, like you said, so we're recorded on April 10th. We had April 9th yesterday was one of the 10 best days in stock market history. Like stock market, the history of the stock market.
Back to the Depression.
And that comes on the heels of, as you mentioned, one of the worst, 3 or 4 day drawdowns in the history of the stock market. So just like COVID-19, these days are always tightly bunched. Volatility tends to really cluster together. And the reality is like timing your way in and out of that, I'll just say, I believe it to be impossible. And so
I don't know.
To weather the storm, you have to kind of grit your teeth and ride the wave, add some, if you're feeling opportunistic. I think that, good investors probably are leaning into the pain, but the reality is this uncertainty and the way that markets act in these times of uncertainty is really, really painful. But, despite, we've talked about this a million times, despite all these crises having different catalysts, they all have one thing in common, which is that they've eventually ended. And in large part due to the profit motive of companies that you're talking about. And that's what we own. Like that's my big takeaway. So I don't know, Mike, is there what else do you build your umbrella out of? I don't want to ramble too much here.
Yeah. We talk about planning a lot. It's a term that we use. I think it's super important. When you think about it, if the world was certain, right? If you just knew what was going to happen and the arrow went up and to the right, you would never need to build a plan. There'd be no reason to. I know it's going to happen. I can predict the future. I don't need a plan. We plan because the world is uncertain, right? That's the whole reason why we do this. The umbrella is coming to us, coming to an advisor and saying, help me plan for uncertainty. I know that there's going to be some, and it might be political. It might be something that I so vehemently disagree with, so I need you to help me plan through that. You can hold two things in your mind. Remember that you hate things happening, but you're going to continue to invest on the plan. That's part of being under the umbrella. It's really, really crucial to this whole thing. And just try to take each day at a time. I'm not saying that you need to think 1, 3, 5 years out. The news could still get bad. It could. This could take a turn for the worse. We could end up tariffing at 1,000%. Nobody knows. This is an event that we're kind of never seen in the modern era. So just take it one day at a time.
Yeah.
And again, if you need help, call somebody, right, Ross?
Yeah, absolutely. That's what your Baird advisor is for. I want to end with you mentioned like the idea of uncertainty, right? I've used it. I've seen it in a million charts. This policy uncertainty index, right? It's gotten really popular in this time because so much of the uncertainty is stemming from policy. And it's at, highs we haven't really seen since COVID and outside of that, unmatched, over the last 40 years. Something that I did in a recent piece was flip it upside down. Say, all right, we know things are uncertain now. When were they the least uncertain? When were we the most certain about things?
Yeah, when we get to certainty.
Yeah, right. When do we feel so certain? The answer from that index was 2007. The absolute lowest reading was 2007, the eve of the great financial crisis. So to me, the takeaway is we know uncertainty is coming, but the idea that it goes up and down is a fallacy. It's just our comfort with it existing, right? It's our complacency and our comfort with it. Uncertainty is always there. That's why we build a plan. That's what your Baird advisor is for. So, Mike, thanks for being a sounding board. Thanks for venting with me. This is a tricky time, but
if we have to, if we have to do more of these, maybe we do more than once a month. If things get really crazy, we will be in your inbox more and with content and videos too. Yeah.
All right, Mike. Thank you so much. Talk to you soon.
We'll see you, buddy.
Thanks for watching All That Matters. Opinions expressed in this episode belong solely to Mike and Ross and do not necessarily represent the opinions of Baird. This program is for informational purposes only and should not be relied upon for any investment decisions.